This is Nightly Business Report with Sue Herrera and Bill Griffin.
Tech tumble. The technology-heavy NASDAQ falls again, on pace for its worst week in nearly half a year. The impact for the rest of the market. Careless talk, why hackers could see dollar signs when employees give in to gossip. And it's kickoff time. The NFL season gets underway tonight, but the league has some tough issues to tackle. The state of the $15 billion business. All that and more on Nightly Business Report for Thursday, September 6th. Good evening, everyone, and welcome. Bill has this evening off. Make it 3 straight down days for the NASDAQ, and it's on pace for its worst week since March. And while normally that's not a big deal for the index, consider this. The NASDAQ is loaded with tech companies, and tech makes up more than a quarter of the S&P. So when the NASDAQ slumps, the market feels it. Today, semiconductors were the culprit after several warnings about demand in the chip market. And with that, many of the big names plunged. As for the rest of Wall Street, the Dow rose 20 points to 25,995. The NASDAQ dropped 72, or nearly 1%. And the S&P 500 was off 10. And not helping the NASDAQ today, Facebook and Twitter, both down sharply. And that slide follows yesterday's drop as the tech companies testified on Capitol Hill. The big concern is the fallout following those hearings. Julia Borston has more.
The big question for Facebook's Sheryl Sandberg and Twitter's Jack Dorsey: what regulation is looming for their platforms? After together they faced questions from the Senate Intelligence Committee about election manipulation, Dorsey was grilled by the House Energy and Commerce Committee about whether Twitter is biased. Congresswoman Kathy McMorris Rodgers saying she's concerned about discrimination against conservatives and wants to see change.
We need to see them take some action to ensure that it is fair and that it is free and that we are having that battle, the battle of ideas that needs to take place in the public square, but have it done in a free and fair way.
The question is how impartiality on these platforms could be regulated and enforced. And oversight may not just come from Congress, but also the Department of Justice. Saying, quote, the Attorney General has convened a meeting with a number of state attorneys general this month to discuss a growing concern that these companies may be hurting competition and intentionally stifling the free exchange of ideas on their platforms. But when looking at the innovations of Facebook and Twitter, along with Google and Snapchat, some like former U.S. Chief Technology Officer Anish Chopra say these companies should have a chance to self-regulate.
Really, I viewed the hearing yesterday as to prioritize up the ladder industry self-regulation. I think you're going to see a lot more activity on fake accounts, on ethical guardrails for artificial intelligence, and on new models of consumer transparency, which don't need new regulations, really need the industry to get their act together.
Sheryl Sandberg saying she thinks regulation is inevitable, but she hopes that it doesn't squash innovation. For Nightly Business Report, I'm Julia Borston in Washington.
And even with the slide happening in technology, our guest tonight sees more upside in the market. Joining us is Tony Dwyer, Chief Market Strategist at Canaccord Genuity. It is always good to have you here, Tony.
Thanks for having me, Sue.
Let me start with tech because that's where we just left off. You know, a 2-day slump. And in some cases, for some of the, I know, maybe
wow.
not in your book. Well, that's what I want to talk to you about. Some of the moves, though, in those stocks have been pretty violent to the downside. But you don't see that as an issue.
Well, they were violent to the upside. Like, for example, if you look at Apple, it was very extended. I mean, these stocks have gone up over 20%. At some point, you're going to run out of buyers. That doesn't mean that anything has significantly changed on a fundamental basis. Of course, there's going to be a little bit slower demand when you're in the trade war rhetoric, but ultimately it comes down to how is the business and what direction is earnings going, and that should still be significantly higher.
So if you're a long-term investor, the question you probably have to ask yourself is, if you want technology in your portfolio, do you feel confident enough that a long-term investor could step in and buy some of these names?
I do. And I think what's important to remember, and I'm going to kind of break the cardinal rule of strategist and really simplify it. The sector, the market as a whole, moves with the direction of earnings. So to really be negative and want to be out of either the sector or the market as a whole, you have to want to think that we're going into a recession. And I don't think anybody believes that we're anywhere near a recession given the consumer confidence, the business confidence, and 25% earnings growth in the first 2 quarters of the year.
Another headwind facing this market, the midterm elections. There's a lot of turmoil going on in Washington, and the midterms may increase volatility in the market. Would you agree with that?
I honestly, I think it's the Fed that is increasing volatility in the market. The politics happen, cycle in and cycle out. But the only thing that really shuts down economic activity, and the viewers know this, is when they don't have income and when they can't get credit.
Right.
The Fed drives those two things. So the Fed is kind of trying to slow things down a little bit because the economy is running pretty strong right now. But you still have a full employment picture. The economy is doing well. The global economy is a little bit risky, but the U.S. is doing really well. And I really want to remind everybody that that's really what you want to focus on is the direction of earnings and the direction of credit, and both are still pretty good.
And you see probably another 5 to 10% in the market before the end of the year. As a result of that, are you taking less exposure to emerging markets or global markets?
It's really interesting. When the Fed started to really raise interest rates, which means they're trying to take some money out of the system, that spelled a period of volatility for us in the global markets. When every global central bank is pumping money into the markets, of course, the smallest and most exciting economies are going to do the best. When we're taking money out of the market, it's going to get a little more volatile. That volatility has already happened. You're already down 20% in many of the local markets. Now is not the time to get cautious on it. That was back in December and January.
All right, so bet on the U.S. Tony, thank you so much.
Great to see you, Sue. Thank you.
Tony Dwyer with Canaccord. Well, a pair of economic data points were out today in the labor market. The payroll processor ADP says private companies added 163,000 jobs last month. That was below expectations and well off of July's number of 217,000. The government's August report is out tomorrow. And during the last week of August, the number of Americans filing for new unemployment benefits fell to its lowest level in nearly half a century. Jobless claims are used as a proxy for layoffs. Well, last night, we told you that CBS was in talks with its controlling shareholder, National Amusements, to end their litigation. Today, CNBC's David Faber reported, citing sources, that the board of CBS is deep in settlement talks with CEO Les Moonves that could result in his exit from the company. Discussions are revolving around Moonves' pay package. While under contract, Moonves gets $180 million in severance, but the board is reportedly offering roughly $100 million, made up almost entirely of CBS stock, and the right to claw back some depending on the results of the ongoing investigation into charges of sexual harassment. The Justice Department is reportedly looking into Wells Fargo's wholesale banking unit, which deals with corporate clients, and whether employees in the unit committed fraud. The Wall Street Journal says the investigation focuses on employees altering customer information. The bank is still feeling the effects from its fake account scandal from a few years ago. And 10 years ago, as the subprime mortgage crisis was unfolding, mortgage giants Fannie Mae and Freddie Mac were bleeding cash. So the government bailed them out and took them over, and they're still there. But what next? Diana Olick takes a look at the biggest takeover in history and what it means for the future of home loans.
Fannie Mae and Freddie Mac don't make mortgages. They make it possible for lenders to make mortgages by buying their loans and packaging them into guaranteed securities that investors buy. That's how lenders get money to people who want to buy homes. A decade ago, Fannie and Freddie owned or backed at least 40% of mortgages outstanding. And when the housing market crashed, the two began to bleed cash. So the U.S. government bailed them out and then took them over, putting them into so-called conservatorship. It was said to be temporary, but they are still there today.
What the government did actually worked. Fannie and Freddie kept backing loans. People kept buying MBS. FHA expanded like it was designed to do. Everything worked, and a housing crisis that people said could last for decades lasted several years, and home prices quickly started to regain value.
Under conservatorship, Fannie and Freddie drew money from Treasury, but were and are required to pay any profits back to the government. And 10 years later, Uncle Sam is reaping the rewards. Fannie and Freddie together drew $191.4 billion from the Treasury, but so far have paid $279.7 billion, a net profit of $88.3 billion, and they continue to pay. Some argue that profit is part of why Congress and the administration have done very little to reform the nation's mortgage system.
The problem is that the system works well enough that nobody is willing to take the political risk to change it. And if you look at what's coming up in the next 2 years, we have a presidential election in 2020. The idea that the Trump administration is going to tinker with the housing finance system 18 months, 12 months before voters go to the polls, we just don't buy that.
And the market today is nothing like it was a decade ago when lenders very nearly shut the door to anyone but the most pristine borrowers.
It was probably the most trickiest time for myself in the mortgage business and really for virtually all loan originators. Not only were we having to balance helping borrowers trying to get their homes, but also regulations, licensing laws, continuing education. It was a challenging time in the marketplace, for sure.
Lending is loosening up again today, especially in such an expensive housing market with rising interest rates. Lenders are starting to offer more innovative mortgage products, but there is one big difference. Borrowers must show their income and prove they have the ability to repay the loan. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, feeling the sting of tariffs.
U.S. port revenues represent about a quarter of American GDP. With tariffs on the table, shipping volumes are down. We've got the story coming up on Nightly Business Report.
China says it's ready to retaliate if the U.S. imposes fresh tariffs on $200 billion worth of Chinese goods. Today marks the end of the so-called consultation period for those new tariffs, meaning they could be announced as early as this week. The new taxes could be as high as 25% on some products. The National Retail Federation and 150 other organizations urged the U.S. trade representative today to avoid further trade escalation with China. Well, one place tariffs are already being felt, the nation's ports. Jackie DeAngelis explains from New Orleans.
About a quarter of U.S. GDP is tied to trade. That includes the ports, railroads, pipelines, farmers, and truckers who depend on it. Here at the Port of New Orleans, imports represent more than $50 billion, and tariffs are making a dent. In the first 6 months of the year, import volumes as a result of steel tariffs are down 25%. Add in aluminum, and you're looking at 30%. And it's not just steel or this specific port. In Milwaukee, it's agriculture exports. In Alabama, it's steel and agriculture. And here, add poultry and pork as well. And as the negotiations continue, and as items are added to the list by both sides, the concerns are growing. Kurt Nagel, the president and CEO of the American Association of Port Authorities, says retaliation is an issue.
The tariffs that have been announced already account for about 10% of the total value of the trade that's moving through America's seaports. So that could obviously continue to escalate, but even at 10%, obviously that's a significant impact, not just on the trade moving through our ports, but ultimately to folks like truckers, railroads, warehouses, other parts of the supply chain.
And there's another impact, investment in infrastructure. The port directors we spoke to said business is declining because of tariffs, so there's less money to work with. Then steel, the element needed to build, is seeing price increases. So these projects could suffer, and it makes planning extremely difficult.
There's the impact on the economy directly, impact on the revenues that would impact the ability to invest in these infrastructure investments and improvements that are necessary, but also specifically related to some of the tariff items on China can impact the ability to bring increased size container cranes into the U.S. ports to be able to handle the increasing size of vessels.
Then there's the entire supply chain, a major trickle-down effect. Barges, rails, trucking, manufacturing. 23 million U.S. jobs are supported by cargo moving through the ports. Here in New Orleans, no layoffs have been made, but it's been delicate in terms of a balancing act. And as tensions escalate, a lot is on the line. For Nightly Business Report, I'm Jackie DeAngelis, New Orleans.
The Justice Department charged a North Korean national for the 2014 cyber attack against Sony Pictures and last year's WannaCry ransomware attack that infected hundreds of thousands of computers around the world, including the UK's National Health Service. The FBI says the hacker was allegedly working with a company affiliated with the North Korean government. And that attack on Sony released some embarrassing emails sent from top executives at the company. And that compromising info is now becoming big business for hackers. Andrea Day explains.
Before you send that nasty text about your coworker or dish the dirt about your boss, listen to this.
Employees are not fully aware, and in some cases, the organization's not fully aware of how harmful and how impactful this information can be.
Cybersecurity pros say office gossip is now a big target for hackers. Paul Calatayud is America's chief security officer for Palo Alto Networks.
Especially if these are powerful individuals, CEOs, executives, and their personal brands are what the company is looking to protect.
And no small or large company would want that information leaked out because there's a lot of liability, a lot of legal exposure for that.
CrowdStrike CEO George Kurtz says criminals are hunting for compromising info that they can use for blackmail, hacking into company emails, chat logs, and texts.
It's no longer just a random act. It's no longer kind of just phishing and hoping that you catch something big. It's very targeted now.
And it's the latest twist in ransomware, where criminals lock up your files until you pay. But this time, they threaten to make any juicy data public.
What kind of tidbits are these criminals looking for?
Well, the criminals are going to look for anything that might be embarrassing. Extramarital affairs, it could be health issues that could be embarrassing. It could be HR issues, could be sexual harassment, anything that could be damaging to a company.
In some cases, there could be digital photos from your individual private life that are on your corporate machine.
Take a look at this ransom note sent out to some firms targeted in Germany. It says they'll expose private data, including pictures and videos, for the world to see. With so much on the line, experts say some organizations just pay up.
How much is at stake here?
Billions are at stake. If you look at ransomware over the last number of years, it is a multi-billion-dollar problem.
A problem that reached record levels last year, according to security firm Symantec. But it's still a major risk, with criminals now focused on this very targeted attack.
What should you be telling employees?
One, just not getting infected, clicking on links that they shouldn't be clicking on, going to places they shouldn't be going. If you're going to write that sensitive email, if you're going to talk about the juicy gossip in the office, certainly don't put it into anything that might be written and could be used against you.
So should you pay the hackers to keep secrets? Well, experts say it's really a catch-22. You never know for sure if they'll release the information or even hit you up for more money later. The best advice is to beef up security before you need to make that decision. I'm Andrea Day for Nightly Business Report.
G3 apparel blows past expectations. That's where we begin tonight's market focus. The owner of Calvin Klein and DKNY said strength across its portfolio of brands led to a stronger than expected rise in earnings. G3 expects customers to remain in a buying mood through the end of the year. It raised its outlook for 2018. The shares rose more than 4% to $46.05. A decline in same-store sales contributed to a larger than expected loss at Barnes & Noble. The bookstore chain said some of the weakness in the quarter was due to what it called a, quote, major glitch on its website. Barnes & Noble also said it would begin its search for a new CEO after its annual shareholder meeting next month. The shares were off 8% to $4.55. Maryland has accused Insys Therapeutics of violating consumer protection laws by engaging in a deceptive nationwide scheme to drive profits. Authorities allege Insys, which makes the powerful opioid called Subsys fentanyl, deceived insurance companies by working with local doctors to target patients who didn't need the treatment. Maryland is seeking $20 million in damages. Shares of Insys Therapeutics fell 7% to $8.10. And Ford is recalling about 2 million F-150 pickup trucks on concerns that a seatbelt malfunction could start a fire. The recall applies to the model years 2015 through 2018. Ford said the device that tightens in the belt during a crash can generate sparks when they deploy. Ford shares fell just a fraction to $9.43. Saudi Arabia's oil company, Aramco, is reportedly thinking about creating a $1 billion venture capital fund that would invest in international tech companies. It's an effort to diversify its economy. Dow Jones says that fund would invest in technologies to complement the company's operations. And another company in the region is undergoing a transformation, Egypt. The country is building a new multi-billion-dollar development on the outskirts of its capital, Cairo. And get this, it is roughly the size of Singapore. Hadley Gamble takes us on a tour.
The pyramids, the Sphinx, the Suez Canal. When it comes to mega projects, Egypt's been getting it done for centuries. Now the latest, a multi-billion-dollar development on the outskirts of Cairo, promises Egyptians a better life and a better city, but for a price.
It's a new capital city carved out of the desert and directly in line with President Sisi's new economic vision for Egypt. This is a place that will boast, in the end, greenways that are bigger than Central Park.
The project's first phase, set for completion in 2019, boasts 36 government ministries, residential communities, and the biggest cathedral on the continent of Africa.
So when you first heard about this project, did you think, this is crazy, it can't be done?
Yeah, it's completely right. With this huge space, we are talking about a new capital. The total space, more than 175,000 acres. It will be double of Cairo.
Home to over 22 million people, the current capital city is plagued by overcrowding, pollution, and seemingly endless traffic jams. The new capital promises all the benefits of a smart city: electric-powered mass transport and wireless connectivity.
You have apartments, you have separate villas.
Exactly. And this is what we call it residential 3 or R3. We have, for the first phase, we have 8 residential districts.
Okay.
For example, this district contains 25,000 residential units.
25,000.
Exactly.
That's a lot of people.
Yes. As I told you, we intend to move 1.5 million for the first phase.
Okay, talk to me about the price points.
Price, I think it's reasonable.
While ministers and much of their staff are already making plans for the move, with a basic apartment starting at $57,000, that leaves the majority of Egyptians priced out.
Now, speaking of cost, you may be wondering just how the Egyptian government plans to pay for it all. This is a project being run by the ACUD. That's the Administrative Capital for Urban Development. It's 51% controlled by the Egyptian military and 49% controlled by the Ministry of Housing. Now, they had an initial cash injection of over $10 billion. They've said that this project to completion could cost over $30 billion, but they say, hey, there's no budget. They're expecting the private sector to pick this up. For Nightly Business Report in Cairo, I'm Hadley Gamble.
It is football season, and Eric Chemi scored a plum assignment.
The NFL season kicks off tonight in Philadelphia with the Super Bowl champion Eagles. When we come back, we're going to talk about the business of football and how it's doing.
Are you ready for some football? Well, tonight, the NFL season kicks off with the Super Bowl champion Philadelphia Eagles taking on the Atlanta Falcons. But while tens of millions of fans are ready for that new season, the multi-billion-dollar league is grappling with some challenges. Eric Chemi has more from the City of Brotherly Love.
It's a new season for the NFL, and before any games have been played, the league is already battling a barrage of attacks to its sport. In 2 years, TV ratings have declined 17%, and experts are afraid it might get worse in 2018. The national anthem saga has gone well beyond the football field, with controversial quarterback Colin Kaepernick becoming the face of a massive Nike ad campaign. The league tried to end the national anthem protests over the offseason, but owners and players failed to come to any agreement. Player safety continues to hang a cloud over the league, and new rules this year designed to reduce injuries have caused more confusion among players, referees, and coaches. Despite the negatives, league executives remain optimistic.
I actually am very bullish on the NFL, and I think our best days are ahead of us. If you think at the business fundamentals, whether you measure that by revenue growth, whether you measure that by fan growth, whether you measure that by television ratings, it is still heads and tails above anything else you can get in the media world, and I think that's a strong characteristic.
Another area the league is looking at, the growth of legalized sports gambling as a way to increase fan engagement, up revenues, and open up a new category of sponsors. On a longer-term scale, youth football participation is declining across the country as kids find other interests, and many high school teams are shrinking or outright shutting down.
I think what it's saying is everybody's hearing the concerns, everybody understands the risk. There are inherent risks to play the game of football. What's the right way to do it so we can continue to grow our sport because it's unique, it's different, it's special, it provides people with opportunities they would never get otherwise?
One major retailer, Dick's Sporting Goods, recently said football is a struggling business, and they're focused on soccer and baseball instead.
This is the first year we're really seeing a decline in numbers. Ninth grade team, we had 15 kids at one point. We went out recruiting. We got a little bit over 20 now, so we should be able to field the team, and hopefully we'll be successful, but we're starting to feel it.
But on opening weekend, most teams' fans just want to see a victory. For Nightly Business Report, I'm Eric Chemi in Philadelphia.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening. We'll see you right back here tomorrow.